Inflation sits at a 40-year high. Energy prices climbed 34.6% from a year earlier, the most since 2005, including a nearly 49% jump in gasoline costs. Grocery prices rose 11.9% annually, the most since 1979. Electricity increased by 12%, the most since 2006, and rent has climbed 5.2% from a year earlier, the most since 1987. Mortgage rates sit at a 14-year high, and home prices are high as f***. All things considered, is right now the best time to invest in real estate? Hold the presses, everybody. I'm Shawn McMurray, and I have with you on the phone Mr. $250 million in real estate transactions, my mentor, my good friend, president of BPM REIA, Anish Dave.
Hello.
Anish, first of all, I appreciate you taking time out of your busy schedule to hop on a call and address our viewers out there. So, how's it going in New York?
Yeah, you know what? The weather is great, and catching my favorite team, the New York Yankees, up here. So can't complain. I thought Miami was a little expensive. I forgot New York's still the king.
That's great, man. Look, the real estate market is sitting on some pretty shaky ground right now. If folks were uncertain before, they are Ruby Road from Fifth Element holding a gun to an alien's head uncertain.
Hold this gun.
What?
Hold this gun.
What you want me to do?
Yeah, it's a little bit shaky, but, the world sometimes is shaky. And this is where millionaires really make money, is when you go against the curve and do something different that other people don't.
Fed Chair Jerome Powell openly discussed the need for a reset in home prices. As a beginner and admittedly a newcomer to the real estate game, that worries me a bit. On the one hand, I welcome the opportunity to purchase cheaper homes, but on the other hand, I do worry about what reset means towards my ability to profit from my real estate investments. What is your take on what the Fed means by reset?
Well, the Fed's really, what they're really talking about is we can't have growth 20, 30% in different markets like we are in South Florida or Florida in general, or even nationally. You can't keep going at those numbers because something's going to basically burst. So I'm not really too worried about it. Supply is still low, which, if anything, it might give first-time home buyers a chance to buy. Mm-hmm. So if we were actually fixing up some of these houses that are in terrible condition, we could get them ready for first-timers to purchase the homes and make it a win-win for everyone.
Do you feel, as real estate investors, risk has increased, and how are we as BPM REIA preparing for that increased risk?
Yeah, the risk has definitely increased a little bit, so you want to be a little bit more conservative on what you think the values might be after you fix them up. The good thing, if that makes sense, because there's more risk, it's going to take a lot of newbies out of the market trying to buy properties. One of the things that's happened is when prices were going up, what we realized is you could be a newbie investor and make mistakes and on your rehab, and you're lucky because the prices went up. Meaning, it kind of hides your mistakes because it took you longer or it costs more when prices go up.
Sticking with the topic of the Fed, they recently increased interest rates by 75 basis points in their attempt to curb 40-year high inflation. This has pushed mortgage rates to the highest level in 14 years, with the average 30-year fixed mortgage rate sitting at 6.478%. To add to that, mortgage rates are down 50% compared with a year ago, and housing starts fell 14.4% in May and is down 3.5% year over year. Are you worried that home prices will drop quicker than expected?
No, I'm actually not worried, to be honest, because we're here in South Florida. Every market's a little bit different. Whether it's a condo market, it's a single family market, there's always going to be markets within markets. So you might be looking at the general numbers, but as an expert in your area, you should know what's going on in your neighborhood. And right now, we're still seeing a lot of people move to Florida, a lot of people moving to Texas. I'm pretty, bullish on, real estate investing, obviously. And, there's a lot of big money sitting around waiting to get into the game with these hedge funds too. So they're great investors that we could sell properties to where we don't even have to fix them.
The Consumer Sentiment Index is reflecting the lowest levels on record. Inflation-adjusted average hourly earnings fell 3% in May from a year earlier, the biggest drop since April of 2021 and the 14th straight decline. Tesla is laying off 10,000 employees, as are mortgage companies, banks, crypto exchanges. Long story short, if Americans were having issues affording homes before, right now it is near impossible for a growing number of folks. The economy is on the verge of being Paul Volckered, and we seem to be headed into recession if we aren't already there. I'm even starting to hear the dreaded D word.
Got him!
Get your head out of the gutter. Depression. I know it's taking me a while to get to the question, but there's a reason. In our first video, we discussed the differences between 2008 and the conditions we see ourselves in now. We are not seeing the conditions of 2008, but we also didn't have 40-year high inflation, a pandemic that we are still struggling to dig ourselves out of, and a war that has caused energy prices to skyrocket by 34.6%. Could these be precursors for a 2008-like drop? Should we continue to invest in real estate?
Absolutely, we should be investing in real estate. People still need a place to stay. I think it's a big difference between 2008 and now, meaning even though you're correct, inflation is at a super high, all these other things are happening, but what no one really talks about is there's a lot of money on the sidelines. So when I say a lot of money, and I'm talking for the first time, U.S. or Americans have a lot more money saved in banks. And, the Fed's actually talking about that's why they want to even do another rate increase, because there's too much money in savings. So, add that in with home builders being behind and just not having enough inventory, we're still about 20% less than normal inventory. Wow. So I still think prices will go up, nothing dramatic, or if in again different markets there might be a small correction, but nothing to really be too worried about. And as an investor and if you're a buy and hold person, you're looking at cash flow. So it's like watching the stock market every day. So if you've been watching your 401k or retirement, you might be drinking a lot more, watching it sink, right? So it's watching it daily, up and down. With real estate, you're worried more about cash flow.
Interesting. And once again, thanks for taking time out of your busy schedule to talk with us. It's always a pleasure having you on here. I wish you were here, but you're up there enjoying yourself and having fun. So, I'm happy for you.
Yeah, and as I'm leaving here in New York, I just feel like, the world is a little bit crazy, but it's still a great time to be in the U.S. Our mortgage rates are high, but if you go to foreign countries, whether it's South America, the terms I even have mortgages for 30 years doesn't exist in most countries. You're looking at 10 years, 15 years, and you're talking about interest rates that they're over 10 to 15%.
Wow. So
I know we're complaining about, our interest rates around 6. You could still do a 3.5% loan, FHA loan, right now, or if you're a veteran, you could still do 0% or 100%, I should say, zero money down. So people would be dying to be in our market as home buyers. So as investors, our goal is to help with inventory and buy some of these houses that are in terrible condition that cannot get financed, and fix them up and sell them and make it a win-win for everyone.
Although we've been focusing on educational material from our first couple of videos, we started to notice the nearly daily changes in market conditions. The fact of the matter is, we are going through uncertain times. Everyone is speculating, but no one really knows how this all will turn out. It is important you have the latest information on the market, and it's important that we remain transparent on our position and our strategy moving forward. This is something that we will be doing on a weekly basis and will be released in a more timelier manner. We certainly cannot advise you on what you should do as an investor. You'll have to make those decisions yourself, but knowing what others are doing in the industry could aid you in making the decision that is best for you. Let us know what you think about this segment in the comments below. Don't forget to share this video, people. This information is for everyone. Let's get this out there. And we're out.